Welcome to the Deep Dive, where we try to cut through the noise, get you straight to what's really happening behind the headlines. Today, we're plunging into something pretty dramatic, frankly, a surprising shift in Bitcoin investments. After, well, a truly remarkable winning streak, we've just seen this sudden, stark reversal.
Yeah, it's a fascinating turn. And our mission, in this deep dive is really to unpack the numbers behind this unexpected pivot for Bitcoin ETFs, the exchange-traded funds. We'll dig into the surprising macroeconomic and even political forces that seem to be at play here. And we'll bring in some sharp insights from market analysts, too.
Right. So by the end of this, you, the listener, should have a much clearer picture of what's genuinely driving these market moves. And just to set the stage for how significant this shift really is, let's just drop the big numbers straight away. Bitcoin ETFs just hemorrhaged a staggering $342.2 million in one day for an asset class that's been on such a tear. I mean, what does a number like that immediately signal to you?
Well, that figure, it isn't just a blip, right? It feels like a seismic shift, especially when you look at the immediate context. This $342.2 million outflow, it wasn't isolated. It slammed the brakes on an incredible 15-day streak of inflows.
15 days straight of money coming in.
Exactly. And over that period, we'd seen almost $5 billion flow into these funds. I mean, that's a massive endorsement.
Wow, almost $5 billion.
Yeah, so to suddenly flip like that into a 9-figure outflow, it's incredibly striking.
Almost $5 billion in, then bam, over $340 million rushing out the door. That's enough to make institutional investors a bit nervous, I imagine. So which funds really took the hit here?
It seems the outflows were pretty concentrated. Fidelity's FBTC fund saw the largest hit, about $172.7 million walking out. Grayscale's GBTC, that wasn't far behind either. It recorded $119.5 million in redemptions, basically. Investors pulling cash out.
Okay, so Fidelity and Grayscale were the big ones.
They were. And beyond those two, Bitwise's BITD saw around $23 million in outflows, and ARK21 shares ARKB also shed about $27 million.
But here's the interesting part, right? Amidst all these outflows, BlackRock's IBIT, which had been the absolute powerhouse during that inflow streak.
Yeah, the dominant one.
Totally. It brought in $3.8 billion, like 81% of the total flows during that run. Astonishingly, it registered flat activity on this day. Zero flows in or out. And it wasn't the only one. 4 other major Bitcoin ETFs also just held steady.
Right.
So while some funds were bleeding cash, others just shrugged it off.
Right.
What does that selective impact tell us?
I think it really shows that even with this growing institutional adoption, Bitcoin isn't, totally immune to traditional economic gravity. This reversal, I think it demonstrates the inherent maybe fragility of institutional appetite for crypto assets when they're faced with the prospect of prolonged higher interest rates.
Right. That old chestnut.
Exactly. It's a stark reminder that even in the world of digital assets, the Fed's interest rate policy can still be, the ultimate decider of market sentiment sometimes.
That's a crucial takeaway. So not just a blip, but a clear indicator of this underlying sensitivity. Okay, but to really understand why now this sudden financial pivot, we need to look beyond the market data, right? Wider economic forces. And just before these outflows, we had Fed Chair Jerome Powell giving a very clear signal.
Yeah, that the central bank plans to maintain its restrictive monetary policy stance, hold things tight.
Exactly.
And Powell's comments, which he made at a European Central Bank forum over in Portugal, they're incredibly illuminating here. He pretty much directly admitted that the Fed would have already begun cutting rates this year if it weren't for President Donald Trump's trade policies.
He said that directly.
He did. When asked point blank if rates would have come down in 2025 without the tariff threat, Powell just replied, "I think that's right."
Wow. That's quite an admission, isn't it? For Powell to directly link rate decisions to trade policy like that. Yeah. What does that tell us about the complexity the Fed is dealing with right now?
It really highlights the intricate web they're navigating. Powell explained his reasoning, saying the Fed, quote, went on hold when we saw the size of the tariffs, and essentially all inflation forecasts for the United States went up materially as a consequence of the tariffs. So that basically explains the central bank's pause since Trump returned to office in January. And the political backdrop here, just reporting what our sources say.
Right, we're just conveying the information here, not taking sides.
Exactly. The source material highlights Trump's ongoing criticism of Powell, calling him names and demanding immediate rate cuts. But you contrast that with Powell's really consistent stance against easing too early because, It could reignite inflation. So this whole dynamic creates a policy environment that's heavily influenced by these forces and that directly impacts investor confidence.
So, okay, we've got this big outflow number, the Fed signaling higher rates for longer, and this political drama around trade tariffs feeding into monetary policy. The big question then becomes, is this a full-on retreat from Bitcoin ETFs, or is it just a temporary pause, a blip? Let's bring in what the market analysts are saying, because they seem to be cautioning against reading too much into just one day.
That's a really crucial distinction, yeah. Sean Young, who's the chief analyst at crypto exchange MEXC, he summed it up quite eloquently, I thought. He called this moment just a rest stop.
A rest stop, I like that.
Yeah. He elaborated, saying basically, after almost $5 billion went into spot Bitcoin ETFs, it's no surprise that some investors are taking a step back to think things through. Especially, he adds, with the Fed hinting at holding off on rate cuts for a bit longer. It kind of makes sense, right? The market needs to digest that kind of news.
It does. And what's also notable, perhaps even reassuring for some folks, is how Bitcoin itself actually weathered this ETF storm. It only dropped, a modest 1.3% immediately after Powell's remarks, to around $105,859.
Yeah, pretty contained.
And it's actually recovered since then, trading at $107,822 last I checked, which is up 1.3% in the last 24 hours. So the underlying asset seems, fairly resilient.
That resilience is quite telling. Young attributes these short-term ETF outflows mainly to the broader macro conditions. He explains that higher rates for longer, that phrase, again, it just naturally curbs demand for riskier assets like Bitcoin. It's sort of a classic risk-off move we see in traditional markets, too.
Okay, risk.
But here's a really crucial detail, I think, that stands out. Ethereum ETFs actually posted positive inflows on the same Tuesday that Bitcoin ETFs were bleeding red.
Oh, that is interesting. A counterpoint right there. What does that suggest about what institutions are thinking right now? Are they just swapping one crypto for another, maybe?
It suggests, as Young puts it, and I quote, that institutional investors aren't backing out, but are just being selective and positioning carefully based on overall market signals. So it's not like a blanket rejection of crypto altogether. It seems more like a nuanced shift, maybe even a rotation within the digital asset space itself.
Selective positioning.
Yeah, and his final assurance, I think, really hits home. One day of out-of-the-ordinary trading in the ETF market doesn't negate billions of dollars that have already come in. The bigger picture, that trend of institutional adoption, it still seems to be intact, even with these day-to-day fluctuations.
Absolutely. That's a great point. So just to recap our deep dive here, what we're really seeing is this complex interplay, isn't it? You've got the specific performance of Bitcoin ETFs, which is being directly influenced by Federal Reserve policy.
Right.
And then layered on top are the nuanced ripple effects of international trade policies, even political rhetoric, all shaping investor confidence.
Exactly. And what this all means for you, the listener, is that understanding these connections, these interconnections, it gives you a much richer, probably more actionable perspective than just staring at the daily price ticker. It's really about seeing that bigger picture, appreciating the multiple layers of influence that are constantly at play.
Indeed. And it leaves you with something to think about, doesn't it?
Yeah.
How might future economic policies, especially the ones tangled up with global trade and political leadership, how might those continue to shape investor confidence and the whole landscape of even markets like crypto, which some people think are totally independent? What other aha moments might you find if you look just beyond those immediate headlines?